Today joining me is a special guest, Iakov Levin. He is the CEO or former CEO of Midas Investments and now obviously the founder of his new project, Locus Finance. This was a super interesting chat. It really got to understand where Iakov came from, how he built Midas Investments, and I guess the downfall of a CeFi project that did not survive the bloodbath of 2022, like so many projects. But Iakov was really open and honest about the failures and what he's learned from it, and what he's taken from that into his future with Locus Finance. And I was pretty interested in Locus Finance. It's a pretty cool DeFi project. It's kind of like managed DeFi strategies. So someone else is managing your DeFi strategies for you. And I think that's a really good product market fit. I think people really want that. People don't need to fully understand how to get into all this DeFi strategies. And it's nice to have someone to manage those products for you. If you make it to the end, there's also some really inspirational stuff from Iakov talking about why we're in this space and what we can get out of this. I think my biggest takeaway was just remembering that there's real people building with real ambition and real ideas, and I think Iakov just showed himself as being a real genuine person in the space. But I really enjoyed this conversation, and I hope you guys too. Today we are joined by a special guest. It is Iakov Levin. He is the former founder and CEO of Midas Investments, one of the, many crypto companies that suffered the bloodbath of 2022. He's going to talk to us a little bit about that, which I'm really interested to hear about. And we're also going to hear, about what he's learned from that and his new Locus Finance DeFi app, which I've been playing around with a bit, looking at. I really like the looks of. So, Iakov, thanks for joining us today, mate.
Thank you for having us, I think.
Yeah. Awesome. Well, thanks very much, mate. But before we get into talking about, Midas and the new one, Locus, let's hear from you and your journey. It's always interesting to hear how people got into crypto and how did that get you to founding Midas Investments in the first place?
Sure. So I jumped into crypto in 2017. It was a pretty amazing time. I got some free assets that I earned on my previous work, and I jumped into crypto and started to really digging in. And then I lost everything, obviously, in the altcoins. Everyone does that, and then I started to dive into the new spheres and around the thesis of passive income, which led me to the masternodes, which were some sort of DeFi farming without DeFi, yeah, just farming. And I managed to get some earnings, some profit from this trend, and decided to use this money to establish a company that was doing hosting services for masternodes, for staking coins, and so on, which was called Midas Investments, basically.
Yeah, wow. I think everybody kind of got burnt from 2017. I think everyone has to get burnt at one point in a crypto cycle to then learn their lessons and move on. So yeah, I think everyone can relate to that, and probably more recently for 2022 for a lot of people. So Midas Investments is something that, it got quite large, let's face it. Like, you got to something like $250 million in assets under management. That's a lot of money. That's huge. Tell us about that journey. Tell us, how did Midas start? How did you grow it? And did you see it getting that big? What happened as it grew for you? How did you manage that?
Yeah. It was a 5-year journey. So starting in January of 2018, we closed Midas in December of 2022, and we, as I said, started as the masternode hosting platform. But since we did not have funding besides my own money, we had to pivot a lot. So I had to study startup thing, product management thing, customer interviews thing, and all the things related with crypto. But the main idea with Midas was around passive income, and this thing that actually that I believe in crypto and passive income in crypto. And we can talk about this later on. But the whole idea of Midas platform was about passive income and how to generate wealth over time. So back then it was masternodes. Then we introduced like trading algorithms. We introduced exchanges. We introduced new coins, and eventually we introduced interest rates for Bitcoin, backed up by trading bots. And then it evolved to interest rates backed up by DeFi in 2020, when I saw that in DeFi the money can generate value to the system. So like it's the new type of yield, new type of value that your money can actually bring to other players in the decentralized market. Obviously, it is really new, but in my opinion, this is like a trend for the next 15 years that we really wanted to dive in. So I started to dive into DeFi and became it's hard to call someone expert in DeFi. I mean, it's like when the market goes up, everything goes up, and no one can predict most of the hacks and rag pulls and so on. So I'm aware of all the things that are happening in DeFi, and I really saw that you can build business on top of this. So basically, connecting really complex, complicated but prominent and innovative DeFi with the average retail user that has a job, has a family, and has some other interest than scrolling Twitter feed and navigating through all the new forks protocols and calculating risks and managing Google shit by adding all the rewards there daily and so on. So we wanted to create, like a simple gateway for exposure to DeFi market, and we did. We did create it. So in the summer of 2021, we got 21 million, I think, of assets under management. And then back then, our platform was consistent from all those various products that we pivoted towards. So we got exchange, we got some lock mechanisms. As I said, we got trading bots. It was a mess. And back then, we gathered with the team and decided to basically delete every feature from our platform beside interest rates and focus only on DeFi yields. And this led to extensive growth. In the next few months, we got an $100 million of assets under management, and then leading to 2022, we were increasing with the maximum of like around April, I think, of $300 million of assets under management. Yeah. So basically it was a really I really wanted this growth, actually. So and this is one of the things that kept this really dangerous. Is like I was building this platform for like 4 years, and now it's starting to get traction and the business model sounds okay. But then when people started to find us, obviously we had to restart the company in terms of from building products to being an investment company. So I had to hire a lot of investment guys, create investment processes, creating risk frameworks, creating the safe multi-sig structure for managing assets by many operators and many DeFi analysts and so on. So it was quite a challenge. And and then we came to 2022, the best year for CeFi platforms. Yeah.
Yes, it didn't go so well for anyone, really, did it? So I just
Yeah.
want to dig into what you talked about there, just on a personal level. Obviously, you've gone on quite the startup journey there, and so you went from something that came as an idea and probably a bit of fun for you to starting to think about how I could expand, and then obviously rapid growth, and having to actually go from a startup to a proper business. How did you, personally navigate that? What kind of journey was that for you emotionally to become, I guess, the CEO that you had to become?
Yeah, I put a lot of effort and a lot of like my main thought around entrepreneurship is that the reality will hit you in the places where you where your cognitive biases lay, or for example, your emotional tension lay. If something triggers emotion of guilt, for example, the reality will always hit you in business decisions that will be inefficient due to your guilt. So basically, a startup and entrepreneurship journey is like you are always getting hit by your own inefficient models, and and like it's an amazing and humble journey, you know. And it really evolves you as a human, and as a team member, but also it's really really painful. So I got when I started Midas, I got a lot of stuff like social anxiety, like various things that did not allow me to feel myself decent in the crypto startup industry and so on. So it took a lot of time to navigate through this, build our expertise, build the team that can actually be really really efficient, and we reached the state only in 2022, and we carry this experience to the new project. But yeah, I think that the Midas path is irreplaceable for the for the building and growing of my psyche and the way how I view the world, because there were so many absolutely different tasks that needed to be solved, not tasks but problems, and it required study of cognitive stuff, of product building stuff, of investment stuff, of all those areas, just to be able to survive, basically. Yeah.
Yeah, thanks for sharing that, because it's one of those things when people talk about startups and entrepreneurship, they see the end state more than anything else, but they don't see the changes, especially in the entrepreneur, of what they go through to get to where they've done, because it's not easy and it's very very hard.
Yeah.
So congrats for getting there. So
Thank you.
let's
Yeah.
jump let's jump into 2022 then. 2022, obviously horrible year in crypto for everyone involved. So let's talk about Midas then. So from your perspective, well, let's keep it simple. What went wrong? What led to the demise of Midas?
Yeah. So for those who do not know, Midas closed in December of 2022. We had to cut the losses. Back then it was 55% of users' deposits. Then we redistributed the funds by getting this for the higher amount and trying to reduce the amount of people that were affected by the closure. So and in the end, we distributed Midas tokens that will be swapped to Locus tokens in autumn, token of our new product. So that way, if we will be able to build the product that we want to build, it can solve some financial issues and some suffering that was caused by closure of Midas platform. So how we ended up there? So there are, I think, there are so many layers. I can obviously say that this was the worst year for CeFi and everything went down and so on. But I don't think this it was the thing that put the nail to the coffin, especially after the closure. But the main issue from the business systemic level is that we got too much assets in not so perfect time, and we were not prepared to manage them. So basically, we grew like in 5 months. We grew from 20 million to $300 million. Back then, I was. I mean, it sounds weird, and I think someone may insult me for this, but I was not expect that $300 million is this large amount of money, and I was not aware about liquidity in DeFi, that DeFi could not sustain and DeFi could not chew this amount of liquidity. So basically, what ended up happening, which started to trigger the event for Midas last year is that when we got our maximum amount of capital, 300 millions, during this path, the only thing that we where our attention and our focus laid is how we can construct the portfolio based on the current investment instruments in DeFi, and there were no safe risk yield like we have for Ethereum, for example, right now, or how we have in treasuries right now. That is an upcoming trend in DeFi. You obviously got all these DeFi startups, innovations, and so on. But when you have this much capital, you basically have to invest in every possibility in DeFi out there that passes your risk scores. So we created risk algorithms, we created alert system, and many other stuff. But initially in April of 2022, we have accumulated a long tail of DeFi risk investments, and it was only a matter of time when something popped out. So in our case, it was Ichi Foundation, which resulted in a loss of $14 million. And this was a warning sign for us. So the next few months we spent rigorously building the frameworks of how the DeFi yield should be constructed, what are the risk levels, and how to mitigate them. Basically rebuilding our portfolio from scratch. This thing allowed us to dodge UST, for example, and illiquidity of STETH, which got Celsius under. But still, since DeFi market started to shrinking down, we could not compete with the rates that Nexa, for example, offered. So this created like the systematic level of inefficiency of business model. Another thing that was really important in my disclosure is that it is so hard to build a comprehensive analytic model for the platform like this. So, for example, you have assets and liabilities. In terms of liabilities, you have always changing liabilities because we have swap on the platform, because you have new deposits, because you have withdrawals, and so on. And in terms of assets, you have like 100 various positions in DeFi that constantly change, constantly demands monitoring. You have some liquidity stuff and so on. So basically you need to, in order to have delta neutral position between liabilities and assets, you need to constantly rebalance this. But in order to constantly rebalance this, you need to have like 24/7 accurate data from all the sources, which in terms of DeFi is almost impossible. So we spent like 4 months from February to I think June, July, just to create sophisticated model of calculating all the assets and all the positions that we got on the platform. So this definitely led to the unknowns in the system that were revealed, like in the summer, basically.
It kind of sounds to me like, I guess most of CeFi in general, it got so popular so quickly that you scaled so much that it was hard to know where to put the assets at that point in time. And is that kind of the case? You guys, too much assets came in and it was hard to scale because DeFi wasn't ready for that many
Yeah.
strategies and that much money to come into the space.
Yes. I think this is true. If we would stay in 100 mil, we would be able to make it. But I mean, as cruel as it sounds, Midas had to die. Like as the business entity, Midas had to die. It had been an amazing journey, but it accumulated so many mistakes and so many inefficiencies in terms of all the layers built on top of each other. And the CeFi model by itself is not the future. I think the CeFi experience built on DeFi tools, this is the future. And we tried to pivot it in the last 6 months of Midas by introducing CeDeFi strategies. But obviously it's hard to do this when you have the imbalance in assets liabilities, which we tried to solve, and we got our plan to to solve this issue by raising funds, by waiting for the rebalancing in the closer to the halving. And there were many strategies that would allow us to keep going. But at some point, I just made the decision after the FTX closure, when we got 40% of the funds being withdrawn in like 2 days, and it did not affect the liquidity of our portfolio. So we just had a balance deficit that got much larger in percentage value in just like a few days. So we tried to came up with a plan, but I didn't like it, and I just pushed the button. Yeah.
Understood. You kind of answered my next question there in what you said there. And it's a simple one, really. Is CeFi dead? Is that a thing of the past now? Have we learnt our lessons, and will we see that popping up again or not?
Um, I don't think CeFi is that. I mean, there will be always the demand for CeFi like product in crypto. So right now we see this after the launch of Locus. People are asking us to add uh, Google Google authorization on top of Wallet Connect. So like it makes you think that not so many people are ready for the MetaMask and for the managing their assets, and they feel much more trust and secure in the hands of the entity that they can sue, for example. So it will stay, but the idea here is that the role of CeFi should be custodians, not the strategists. Like because this is the thing that in centralized entity you have this huge access to this amount of money, and as we saw in terms of Celsius and FTX, it corrupts, and you feel invincible. I felt invincible in February, for example, before everything started uh, to uh, to go down. So I think CeFi role is to be custodians, and all the strategies, all the investment strategies should be on DeFi, which basically says that there will be always transparent source yield, transparent liquidity, transparent assets, and on top of this layer we can build the new financial future, new financial infrastructure, basically. So this is what we're working at.
Yeah, I tend to agree with you. I think there's always going to be some people who want someone to hold their hand through this space because it's easier for them in many ways. As we know, it's a big hurdle for people to get into DeFi in general. It's a learning curve that some people don't want. So I think you're right. People need that hand holding, and maybe that's probably okay. Not everyone has to be, a degen and yield farming, stupid APYs. So there's always a place for that, and there's going to be a unique spot for every individual in this space. I wanted to go into, I guess this will lead into Locus in general, but you mentioned something which I hadn't actually heard from anyone before. You were calling it CDFI, which is obviously a play on words of centralized, decentralized finance and how they combine together. You want to tell us about that? And I'm pretty sure that leads into, I guess, what Locus Finance is actually doing.
Yeah. So we started to think about CDFI strategies as the bridge between retail world and DeFi. So our experiments in Midas was about creating some specific strategies from DeFi blocks, and it was somewhat successful, somewhat not successful. And we experimented how we pack the DeFi strategy in a way that retail user would be able to understand it and will be able to use it. What user interface it should have, what user experience it should have. So for me, this is one of the core problems for the onboarding people to DeFi. They should not onboard to DeFi itself. They should onboard to the products built on top of DeFi, and those products should have experience similar to what they expect and what they want, and what they do not know that they want, but they want. Yeah. So in this case, CDFI was our first experiments how to build transparent strategies and present them in CeFi interface. From this idea, and the core idea here is, as I said, bridging retail investors to DeFi. I really feel that this industry has so much potential, and there is a need for creating this bridge for many users to get on board to it. Because I truly believe in the multi-generational wealth that can be built on top of DeFi, which is basically accessible to anyone who will have Android phone, which was not happening before. So from this idea of CeFi, we were building Locus Finance, which is basically that centralized asset management protocol. We create the vaults, which are basically a bunch of strategies that we picked on the specific phases. For example, yield for Ethereum, and basically this is like I think it's more a service than an investment product. By service, I mean that we have our monitoring system, we have our decision making, we have our risk frameworks, and we have our eyes on the market in terms of the thinking what strategies to add and what strategies to take away. And obviously there will be a governance process on top of this, and so on. So our main idea is to create a one single token that is easily to trade on Uniswap, for example, and just to hold in the wallet, which represents the yield for Ethereum, for example, on Ethereum. So like it's the basket of all the decent yield positions with risk frameworks, with alert system, and so on. So you just hold the token and it increases in value. And and I hope this will make people happy and easy to use. So it's like just purchasing one token will give you exposure to the vast variety of strategies.
So would I be right in thinking that these strategies that you're putting in Locus, they're obviously DeFi plays. They're obviously transparent because you're telling everyone what they are and it's on chain. You can see it. Would these have been the kind of strategies that was, I guess, behind the veil of Midas before? Would you have been deploying these previously? Just not letting people at the front end know what was going on.
Yeah. I mean, the industry changed a little bit. So right now, when we were working in Midas, there were no such thing as the Ethereum liquid staking infrastructure. So right now, you have a huge competition field between all the liquid staking providers, and it's really healthy for the industry, this type of competition, and you can build your wealth on top of this competition, and it's a great thing. So we didn't have this one before, which was really sad. Well, I think we got ST Ethereum, but it was not the main case back there. But since the industry evolves and we updated all the strategies. Our DeFi core index, which is basically the yield exposure to the industries of DeFi, not DeFi, but stablecoin market and the market of liquid staking derivatives, which is like exposure to balancing, exposure to curve, which presents a nice incentives on top of it. This thing changed because the market changed. But we got our exposure to DeFi somewhat index before. And in my head, all the indexes in DeFi should be yield bearing, which was not the thing before. Also, like it's another amazing thing that DeFi presents to us is like the yield bearing indexes that basically not only have upside in the prices but also upside in the yield generation.
Sure. So I think the main point of difference that I've seen compared to other, I guess, DeFi applications out there that do similar things is that this is more like a managed DeFi strategy, isn't it? So you guys can actually change the strategies effectively on the run whenever you see the market needs to change or you need to pivot or based off risk. So is that kind of how it works? Is that you guys still have the ability to change the strategy up?
Yeah, for now, yes. We have the plans for launch of governance tokens with the upcoming swap of Midas tokens to the locals, and I'm trying to crack this puzzle of creating governance system that would self-manage the strategies by itself. So like it's not that we should remain with the wheel in our hands. It's more like how can we create the system and attract experienced and unique DeFi individuals to be able to participate in the governance process of maintaining those strategies. I try to go right now from layers to layers. So our basic layer and the core is like launch the vaults and get the users' feedback and see what's out and so on, and then build layers on top of it. One of which is the governance layer.
Absolutely, yeah. So that's, I guess, bringing us to the next thing I want to talk about is the Locus token. I guess you've mentioned many times there that you are planning on it. What's the tokenomics of it? How's it going to work? I know you mentioned that you're giving a swap for people from Midas tokens. So what's the plan with it?
Yeah. There's so many plans, obviously, but I at this stage, honestly, I'm trying to dive into every tokenomic that seems interesting. There are so many tasks that needs to be solved for different players in the tokenomics. So I'm thinking about I'm thinking from business perspectives, and I do not have like a spreadsheet with the old tokenomic line because it needs to be calculated based on the interest of the players and so on. But this tokenomic needs to obviously have some sort of revenue sharing. This tokenomic needs to have aligned interest with our Midas users, but also attract new users. And this tokenomic needs to have some sort of the lockup. And the most important thing, this tokenomic needs to create the insurance fund for the long tail DeFi risk. So, for example, I'm totally aware that every strategy that is going to be built on top of DeFi will have a long tail risk of getting hacked. Obviously, this risk diminishes over time because each hack makes the industry stronger. But still, we need to have like protection from this case. And right now, I'm trying to connect the dots on all of these things, how this machine can work, and talking with every guy I can reach in terms of tokenomics through Twitter, Telegram, like YouTube, everything, and we will see where it will lead.
Yeah, amazing. It sounds like you are on top of all the boxes that I like to tick when it comes to tokenomics there, mate. So I look forward to seeing how that one comes about. There is plenty of tokens out there that are, let's just say, useless. So I'm glad to hear that you are
Yeah.
putting in the right steps in place. But what I really love also here is that you've actually got a working product out there now, and then we'll bring the token into the space. It's clearly what we need right now to get out of this bear market is people building products that people actually want, and I can see you are definitely doing that. So I guess the question I've got for you here, and this is a tough one because I'm asking you for your crystal ball here, why will this Locus DeFi model survive where Midas didn't? Why is the DeFi space, in your opinion, is going to be more of a longer term sustainability?
Yeah. So there are a few things. Obviously, playing in creation of DeFi protocol is like you have only one life basically. If you're getting hacked or you're getting some huge mistake, this leads to the closure of the protocol. So in this case, the main goal during this year is to set up the insurance fund and build the risk exposure around this insurance fund. So this will give sustainability around long tail DeFi risk. In terms of the business model, no, let's go in terms of DeFi. In DeFi, you have two amazing things that is going on right now. Two base yields. The first base yield is Ethereum staking. The second base yield is USD treasuries that is getting onboarded through various DeFi protocols, but most prominently MakerDAO. That I hope will make DAI basically the the base layer for yield on top of DeFi. So this gives me the connection between real world and traditional finance and DeFi, because you have two no risk exposure to the yield. And on top of this income of the capital to the system, you can build so many great, interesting investment products, and we will see the whole industry builds on top of this. So our idea is to be the meta system on top of DeFi. So the way we constructed our walls is that we are able to tokenize anything, tokenize the bunch of strategies from different chains, which gives us the retail product of exposure to yield on all the chains. So we take all the hassle from the user experience of managing all those positions across many chains. So and we have the product around the yield generation on top of Ethereum, which is tokenized, which means you can borrow assets under it. So we want to provide this utility level on top of the strategies, and those strategies are not limited to anything. So everything that DeFi will present can be put into our strategies. So I'm thinking about building this meta system and the ecosystem around this meta system. So like lending markets, maybe our own stable coin that you can mint under the strategies with some specific collateral, which gives you so much flexibility and provides another revenue stream for the protocol. So, but obviously, our long-term plan is to become the largest asset management in the world, of course. But it will require DeFi to evolve. But if we will be able to handle the first 5 years, we will establish ourselves as one of the key players on this market, for sure.
Yeah, you've kind of led me to where I wanted to ask with my last question here, which was 5 years' time, what does Locus Finance look like? You kind of hinted to it a lot there. And why not be bold and want to be the biggest? But so 5 years' time, where is Locus? What's it doing for everyone? What's it doing for you?
Yeah. I mean, I really want to create a safe way to generate wealth on top of DeFi. Like I see this opportunity, and I see that we may be early, but this job needs to be done. This breach needs to be made right now, so the so the blood can flow in the both directions. So for me, the idea of the passive income is like the thing that liberates human psyche from the oppression of doing what you do not want to do for the money. So and I really want to create in 5 years this machine that will be governed by itself. I do not want to create strategies. I do not want to I just want to be in community and think about visionary stuff, and that's all. Yeah, and for this well-oiled machine, I really feel that this opportunity can change so many lives by providing secure, higher than traditional markets yield that basically gives so many opportunities for the people, like to go study, to drop your work, to follow the dream, and I think this is the future of humanity, where we have the efficiency of the world managed by robots, AI, robots building robots, and so on, and we just have art and fun in the most healthy way, obviously. Yeah. So it really inspires me. Yeah.
I love that vision, mate. I love that view of the future. I love basically everything you said there, mate. I couldn't agree more. That's what got me into DeFi, the concept of the passive income. It's what gets me excited about the space of being able to help other people get out of oppression, as you said. So I couldn't leave it in a better place than that, mate. So yeah, thank you very much for your time, mate. For people interested, Locus Finance is, I think it's open now, is it? It's available now
Yes.
for people.
Yes.
So
yes.
I'll put links in the notes for everyone to go check it out. I've had a bit of a play around the website. It looks really schmick. It looks good. It's a great user experience. So I'll definitely be interested in it. I'll definitely be following this as it goes. Iakov, thanks for joining us today.
Thank you. Thank you for having me.